Yo, what's up guys, it's Pios here, the CryptoPie, and today we're going to talk about ascending triangles. Alright guys, so what is an ascending triangle? It is a triangle that you can find in the charts that often causes a breakout, and breakouts are cool, right? Because you get massive increases in price. So this is a very quick showdown of what a ascending triangle is really. So it's nothing more than this, guys, right? We just take the trend line here. We're just going to draw a little bit, alright? So it's nothing more than this. It's upwards, and then you have a ceiling. You see? So it's an ascending triangle, right? It's a triangle, and it's ascending. So that's all it is. And you see this all over the charts. We will look into a live example in just a minute. Because I'm in a trade like this, right? So right now, as we speak, I'm in a trade on Neo in an ascending triangle. So that is literally what it is, guys. It's just an ascending triangle, right? So if we just take this off, we take everything off, we remove stuff, and then we will look at the live example. So are you ready? Here we go. So as you can see, this is the daily chart for Neo. All you need to do, and I like to use rays, right? Remember, I like to use rays. I just did that for the drawing purposes before. Well, as you can see here, even if you were to do this, actually that's not too good. But if you take from here to here, you can see that we kind of have a ascending, right? We get higher lows, and we have a ceiling as well. Right, we have a ceiling which is around here, roughly, right? Roughly estimating that. I mean, you could always go here and put it on line chart. Then you only get the open and close, and you can see that the open and close, even right here, this was kind of the top, even though the candles tell you like the wicks went higher, but this wick went as high as this top. So this is really the ceiling, guys. So what could happen here very well is I entered here, right? So I'm no problem, like 29 and 30. So I'm doing well good here. But so what can happen here is something like this, right? We go back to the ceiling. We might break through, or we get rejected. It goes back to trend line. Tries again. Perhaps we'll break through, maybe not. It will try again. And eventually you either break up like this, or you go back down and you break down like this. So this is what I wanted to teach you guys, because it's in a lot of charts, right? You can draw this in a lot of charts. Higher time frames work better. That's for any formation that you find in a chart, or any chart you play. Higher time frames work better than lower time frames. But so where would you buy? Right, that's the next question. That's what people ask me. Where should I buy Pygos? Well, either close to this line on the bottom, right? So you see it's ascending, or let's say it breaks out, right? Let's say it breaks out. So we start it here, it goes here, and it breaks out. Let's say it breaks out. Well, you can buy on the breakout, but you never know, because you need to look at the volume as well, see if it's good volume. If it's good volume, then it's most likely a good breakout. But what it often does, not always, often, nothing's always in trading, it goes down, tests the support, so the old resistance is now support, and then we're off to the races, right? Then we're off to the races. It just keeps going. Yeah, guys, that's basically what you do. You either buy the bottom, which is more safe, obviously, or you buy the top after it breaks out and then on a retrace. So you either buy close to this line, or you break after it breaks out. You don't buy right now. What is the point in buying right now, right? We're in the middle. So another thing I use to determine whether this could be a potential breakout or not is I have to double click here. So I use the stock RSI and the RSI. This is a relative strength indexes. You can see that We're not overbought here yet. When you're above this line, above the 70, you get to overbought area. When you get under the 30 line, you get to the oversold area. Well, on this one it's exactly the same. Above the 80 is overbought, under the 20 is oversold. So, but on this line you see two more lines, right? You see a blue one, which is the faster moving average, and the red one, which is the slower moving average. So if the faster moving average, the blue one, crosses the orange one to the upside, that's a great sign. And when that happens on the daily, well, let's take a look what happened, right? What can happen. When it happened here, it went all the way to here, right? And then it went down again, and it went up again. It went up, right? But it went kind of, not in a nice way, not like this. It kind of went sideways, and it went sideways here as well. So, yeah, guys, I mean, that's what you can do. And I hope you guys enjoy this, you know, these kind of videos. If you do, you know, leave a comment below and tell me, hey, Pygos, make more of them. But, you know, I'll definitely make some more. This is just another basic video. This is ascending triangles, guys. And the next time, I'll probably talk about a descending triangle, which is a bearish sign. It's exactly the opposite, but we'll talk about it then. So yeah, guys, if you enjoyed this video, please like and subscribe. Hit that post notification button. And if you got any questions at all, leave a comment below. And I'll see you guys in the next video.